Well, hello and happy Saturday, 8/8, August 8th of 2026. As we get into our weekend update, I want to thank you for joining and following along as normal. And remember, these are the views of myself as an educated research analyst and how I would trade plan around the instruments that I'm looking at and reviewing for you. The idea here is for you to do your own due diligence as trading has risks and try to learn as you go along. As always, ask questions in the comments. And if you find the information useful, please like, subscribe, follow, and share and send to others you think would benefit. So, what a crazy week, guys. What a crazy week. We had the markets kind of turn on a dime in weaker than expected jobs reports, non-farm payroll. Fell by 23,000 versus the expected 80,000, with prior months revised lower. This eased concerns about imminent Federal Reserve rate hike. Odds for the September rate hike have dropped notably, right? So indices are rallying and metals are rallying based on the fact that the odds of a rate cut are much lower. Um, which again supports also treasury yields and equities. Strong corporate earnings in AI, tech, and software boosted the S&P into all-time highs, folks, all-time highs, as well as easing U.S., Iran, Middle Eastern tensions, and lower oil prices. So there's been progress on negotiations on opening the Strait of Hormuz, but maybe it's just me. What do you think? I'm a little skeptical here, but there's been some easing tensions, so oil relaxes. Uh, that can turn on a dime, so stay tuned. I mean, we're not even out of the week. We have a day and a half left of the weekend, and anything crazy can happen. Um, Tech and semiconductors rebounded after prior weakness. AI-related and chip stocks led gains amid improving sentiment on spending returns and growth. I'm a little skeptical here because if you know about circular investing, that it's been Google is giving Anthropic uh, investment money, and then Anthropic is turning around and buying their databases back. So is that new dollars? That's the question, and cyclically invest like that. And they're able to put that on these earnings reports. I give you $100, you give it right back to me, and I'm able to count that as new money. It's an interesting dilemma. A little deeper fundamentally than where I like to go, but to me it screams 2008. So just be careful on any trade plan. Now, because of this, there's been a risk on sentiment and index breakouts. Everybody thinks that risk is on the table. We can just invest, invest, invest. So we'll see what the charts say here. Next week, this coming week, we have CPI and PPI coming out. I believe that is Wednesday, Thursday stack. That's the most important stuff coming out. We have retail sales, some other economic factors like initial jobless claims and some consumer sentiment numbers, and then some earnings. So we're a little halfway through earnings season. So without further ado, let's see what the charts say. All right, let's start with the indices. The Nasdaq, this bounce that we felt might not have enough volume in it, it just continued to run, guys. Where I was wrong was I felt the upper limitation while the war was on was the all-time high anchored VWAP, this red line. So not only did we have a one-day close filter, but we closed the entire rest of the week once we crossed Tuesday, the rest of the week. So right now, it's buys above the all-time high anchored VWAP. So we identify that as resistance above. And if that broke, the identified resistance above is that zone that we called the top back in May of 2026. We called that well before it ran into that. That's actually a very sticky field, 30,000 to 31,000. Now, with the other indices setting all-time highs, it begs the question, will the NAS follow? And as of now, we can expect probably an upward test into that box without a negative catalyst, as long as everything stays positive. Volume's lower than the sell-off, but is enough to sustain more upward movement. With that, with the Nasdaq moving down and us predicting support near 26,000, and we predicted that support near 26,000, look how close it came. It came within 900 points What you think? 900 points is a lot, but by percentage, it's not a lot. We were close. I still believe that 26,000 level gets tested. It never has been tested significantly in market structure, volume, price, and point of control. However, this rebound due to some changing dynamics in numbers that everything bounced up has caused buying back into the market. Because I felt that it was going to go down to 26,000, I did take a hedge in my positions. And you see, I was correct here for a while. I did target this gray box, which was approximately correlated to the price of the NAS being at 26,000, which it never hit. And this is where I was planning on doing that. And guys, what you got to, so right now I'm losing money on this hedge. Oh my gosh, you're losing money. Yes. It's an insurance policy against the whole rest of my portfolio losing money. So I'm losing money now on this one insurance policy while everything else gains. Does that make sense, guys? It's to decelerate loss, and now my loss is only going to be in this should I realize it. And actually, my stop loss will kick in when or if the NAS breaks 31,000. So if it doesn't, it hits this red box and sells back down, I'm going to be proven right. But again, it's an insurance policy against things that I'm holding long when they drop. And that's what hedging is. So if you want to learn more about that, reach out. The S&P 500 new all-time high, guys. You can see previously we had this resistance box. It exploded through it quite strongly. When you hit support and resistance, it takes a strong catalyst usually to break it the first time. And it did. Now that this was identified support being red, we will change that box to green because guess what? That is support. So any S&P 500 products that you want to correlate or buy in the S&P, I think the buy zone now is 7,600 to 7,625 if it pulls back. If you like to trade futures, if you like to trade options, that is its support level for a re-entry and confirmation of that. This was formerly the all-time high that is now switched to green, and our new all-time high is here. We'll let a few days work out where we can put that in, but as that develops, that will be a key VWAP as you see when you follow me how critical anchored VWAPs are. The Russell 2000, after being suppressed by its previous all-time high anchored VWAP, again blew through. Everything moved by Tuesday. We had a 2-day close filter above it on a strong buy near retest. So buys in the Russell need to be close to 29.75 to 3,000 and then up. And we do have a new all-time high buy. It's close. I mean, it's even argued that this could be a double top. In other words, that top comes here. There's the second top. If it comes down, this is known as the neckline. And this line here will follow it. If that breaks, that's significant down. So we're not out of the water yet, even though this is bullish buying. This could be setting up a double top. I don't know. We'll see. This leg of the double top is probably too drawn out to consider that. We would like it to see more abrupt something here. But again, this run's anchored VWAP was not tested recently, and I expected that to happen as we saw in the other indices. But for now, our near-term support is 29.75 to 3,000, and then below that is still about 28.60. Oil cooled off again as I opened the report with easing tensions with the Strait of Hormuz. Right now, overhead resistance exists around the mid 84s with lower support in this gap from the start of the war that has proven and has been tested and has been confirmed as support between 67 and 70 for next buy zone. So I like that as a buy zone, guys, if the war or a peace deal is active and there's no peace deal done. So here's your next buy zone. You can have a stop loss just below it and then run it right back to the all-time high. Keep an eye on that because that trade would be active. You could also short the all-time high if we get up there and tap it and then a peace deal happens, right? So keep an eye on oil right now for buying discounts as long as there's no deal. Google ran this week. It did hit our nearly hit our trade entry on the discount. You can see how close it came and then ran up and now it's pulling back. I still like this zone. It's currently at 350. You can use this previous anchored VWAP at about 349 if you want to start sizing in, but I still like that 300 to 315 zone. If you bought this, will you let me know? I had a lot of people who love Google who bought it on my discount call. Let me know if you got it. What price did you get? Let me know in the comments below. Microsoft, holy explosion, guys. I called this buy zone way back in June. It hit that buy zone, ran up, and then just kind of ran sideways. And I said, if we can get another discount, it's going to be in there. Now, you could buy that VWAP, but the folks that bought that, man, did you get a jump. So the next buy signal was this 2-day close filter over the all-time high anchored VWAP, which I set a trade plan for everybody last week in last week's video where I said you could buy that with risk commensurate to what you're comfortable with, and then ride it higher to previous all-time highs where it looks like it wants to head now about 556. It's currently at 500. That's a whole number where there's going to be some resistance. But this trade plan at the all-time high anchored VWAP is up, looks like about 10% since we put it out. If you bought it, if you own Microsoft, let me know in the comments below. IonQ, we just don't mess with this one. We've called so many successful trade plans in this, and I said buy that uh, IPO anchored VWAP at that white line. But what did I say? Between 30 and 33, 31 and 33. Well, if you did that, you're now up over 35% on a trade, and we're targeting the all-time high anchored VWAP. Congratulations. Do you own IonQ? Let me know in the comments. Bloom Energy, we had a trade plan near this runs anchored VWAP, and it just missed entry by a few bucks because I said that if we got confirmation there, we're going to test the all-time high anchored VWAP. Look how accurate this is, guys. You can see it was a near miss. Buyers came in ahead of it, but look where it stopped, right at the all-time high anchored VWAP. If you haven't learned how to set VWAPs and anchored VWAPs and know when, how to put them, colorize them, organize them, let me know. Reach out. Let me know in the comments below. Do you need help? I can send you a link. IREN, it hit these critical anchor VWAPs for a buy. We did talk about if it did, it flushed you out real quick. If you wanted to wait for confirmation, it would have been on this candle. If you're in IREN, I think the upper limit is about 47.85, where that all-time high anchored VWAP is for its next test. Now, I'm not saying it fails there, but what you got to watch out for is if price declines more, we're right near a death cross. But if we get a ricochet here, that will confirm that it's going to run higher. So it's at critical pricing right now. Closing above the all-time high anchored VWAP would confirm that will be no death cross. Closing back down here will be a death cross. That is when the 50 crosses the 200. So we're going to price monitor IREN for you. Let's get into gold, folks. Man, oh man, oh man. Have we been right about gold? Okay. We've been right a lot about gold. And then one thing that we were not wrong about, but suspicious with, gold being so one thing that we're absolutely right about is 4,000 was near-term support. It came down, touched support, bounced back up very strongly, touched it again, bounced a little weaker. So you see this declining. So what this formed is a descending triangle where you have level support and descending resistance. That typically means there's about a 68% chance that it's going to break downwards. However, I said in the last video, an upward break is one of the strongest moves in all technicals. The 32% that breaks out against that percentage is one of the strongest moves in all technical analysis. Look how strong that move was. It covered almost the entire field to 4,400. Man, was that beautiful. So if you like, subscribe, and follow, you're going to get this information. You're going to get this education. When you do that, I think overhead resistance is 4,400. We're going to see how it reacts there for a discount, then to move higher to the all-time high at 4,600. Let me know. Comments below. Are you in gold? Do you like what you've learned? Silver's the same story. Descending resistance, but hitting support at that 54 to $56, forming that descending triangle and then breaking out upwards. The upward limit of this move is between 77 and 74 for resistance. You can see I have that box drawn in there. So if you're a buyer at 54 to 56, where I said that multiple times that you could buy with a disciplined stop loss just outside of that range, because if that broke, we were going to see 45 to 49, which we didn't. Remember, all technical analysis is a search for support and resistance and how to trade it. We trade plan all around these levels that we identify. You can ride this up with a trail stop, looking to get out between 71 and 74 if you were in this. Let me know. Let me know in the comments below. Did you buy the move in silver? Platinum held its 1500 level. I did say that there was a lot of consolidation here. If this broke, we would teleport down lower, if was the statement, but we've proven to move up. I think the next targeted resistance zone is going to be the all-time high. Anchored VWAP around 1900 to 1930. Maybe a little too late to buy here. I would look for a bit of a discount, maybe to the mid 1600s if it pulls back, and then see if you can ride it up and then have a discipline that or have a stop loss that is commensurate with your risk in platinum. Copper. We've just been nothing but right in copper. I've given you so many buy entries in this, so many, and now we have a new all-time high. So we need to change this anchored VWAP to green, and then our new all-time high, we're going to make it red, right? Your next discount. I mean, I do a lot of meetings with all my teams, and this is one that comes up every time, right? You're for sure a buyer around 630. If it pulls back, it's currently at 653. You can set a regression trend line on this run up and see, 640. So 630 to 640 is probably your next discount run if it stays bullish. We can also throw a fib over that to see if we can see what the golden ratio is. It's saying about 646, half the move is 635, which is right in that sweet spot. So 630 to 640 is your next entry, folks. Keep an eye on that. I called it here. Let me know in the comments below. Have you bought copper off of any of my calls? It's a great thesis. Let me know down there, chat. Let me know. KHC had its earnings report, had a double beat. This is one identified for everybody as a longer term hold as a dividend payer. I said it was a buy between 22 and 24. At one point, we were up to 28 in unrealized profit, which we like, but we're really hunting the dividend. It did sell off after the earnings report. I'm not sure what the forward guidance was. Sometimes they sell off due to poor forward guidance. However, this one more than likely uh, lowered due to profit take afterwards. So it's near the buy entry again. If you want to buy and hold this one for a while, again, I think the buy zone is probably slightly higher between 23 and 25. Do you own it? Have you bought the call on this? Is this one in your long portfolio? Let me know, chat. Finally, DRAM. This is a way that you can participate in so many stocks. Again, you can participate in this managed ETF. They do balance it with Treasury bills, but you have SK Hynix, you have Micron, you have SanDisk, Western Digital, Seagate, um, Gigatech. There's a ton in there. But I've called this buy zone between 48 and 50 now since it's been on this report. That is still the buy zone with plenty of upside. You do have to recognize there's resistance at 58. If you want to wait for 58 to be closed, the price to close above that for a confirmation that we're heading upward, you can, but I would start nibbling now. Anywhere in its current pricing is $50 and down. Okay, this is a way for you to own a lot of different companies in an ETF that's managed and just let it cook. Take some of your profits from your day trading with me, take some of your profits from your swing trading with me, and throw it into DRAM. Let me know. Have you done it? Let me know in the chat. All right, guys. So the things that I expect coming up, uh, I know there's a lot of hopeism in the market. Um, I don't want to sound like a half glass empty guy, but there's a lot of signals too that we could have a major retracement. Again, if the word nuclear happens, I pray to God it doesn't, but the word nuclear happens, you can kiss this stock market goodbye. It's going to teleport to those levels we talk. And I hate to say that, but anytime we have this much aggravation and potential heating up of war in the Middle East, that is definitely always needs to be a consideration. So always have protective stop losses. Don't be in any position naked, even your long holds, right? So if you need any help, you can comment below. You can reach out to me. I can teach it to you. I can do private lessons. I do a lot. And thank you for following, guys. If you find this useful, if there's tickers you want, let me know. Like, subscribe, follow, and share to other folks. Have a good one, guys.